I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market gained solid ground again on this holiday shortened week as favorable seasonality combined with expectations that the FOMC minutes would show a coming slowdown in interest rate increases. There was a soft start to the week as COVID-19 spread in China and fears of lockdown grew, and the cryptoverse saw more fallout from FTX SBF debacle. But Tuesday saw the S&P 500 move up sharply, 50 points, and the Dow up 400, as investors anticipated a tone change in the Fed minutes. Wednesday saw much softer economic data lift the markets again early on. Bonds moved sharply to the upside as the manufacturing PMI came out at 47.6 versus 50, which shows a contraction. And those continuing claims for unemployment at an 8-month high. Volatility did hit around the Fed minutes, but the market again made gains for the day, up about 25 points. The Fed minute showed them saying that ongoing rate hikes were appropriate. Effects of previous rate hikes were uncertain, but a substantial majority of the Fed heads preferred a slowing or lowering of the level of rates or the increases in the number of rates. So the market did get solid gains. Of course, Thursday the market was closed, and here on Friday, on a holiday shortened day, the stock market very quiet and just a little bit of a stalling going on in this rebound. On more news out of China that there is spread in COVID-19 and reducing those lockdowns is not likely. That is affecting Apple, which is down on the day almost 2%, as there are issues there with Foxconn and the manufacturing of the iPhones. Also coming out was news that Japan's inflation rate at 3.6% is at a 40-year high. That could be favorable for the yen. Investors may find the upside tougher going with news of the Fed slowing their rate increases now out. And talk is likely to be more about them staying tight. Fed desires to be restrictive for a long period of time. They did say that, and I think that's going to be out into 24. So I don't think there's going to be a pivot by the Fed in 23, pivot being where they actually do cut rates. I don't think that's possible for a year to come. It is amazing after 25 years of bubbles and slumps, they have not learned that trying to affect demand is a failure. It causes malinvestment, it causes inflation and deflationary busts. But clearly, this is what we have to live with until they're fired. And that could only happen by people voting for people that understand the Fed is responsible for the challenges we have now. Indexes still are making ground towards our target area, resistance areas, and I'll show you where those are in just a few minutes. But market volatility may soon come back. We still think that this bear market rally rebound can hold into early 23, maybe sometime in January. But in the next few weeks, again, we'll be talking about the poor risk rewards for the bulls as this market moves up into those areas of thick resistance. For the week here, early on Friday, the major indexes are up 1 to 1.5%. The bond market 30s gain 2 points, and the 10-year yields fall 7 basis points to about 3.73. If you watch Future Speak, you'll be able to see our downside target in those yields and upside target in the bond market. Gold market around unchanged. A down move came back. Silver market gains there about 37 cents. The dollar moving still to the downside, about 0.7% loss. We think the low in this dollar move is in a couple of weeks. And that is important for all markets because as the dollar was very, very strong, the stock market got very weak. As the dollar weakened, of course, we saw metals strengthen, stocks strengthen, and that inverse correlation is likely to hold up. And once this dollar does make its bottom, and as we say, that's not far off, that could be calling a turn for some of these markets. Oil market down about 2%, traded below 75, which was our first target. We said that when it was well up closer to 90. And the $62 number that we talked about that could come in January, February, well, that is in play. So some important weakness that we're seeing there in the energy market. That XLE, which has been super strong, may actually have some risk pretty soon. Coming up in this show, Arby's going to give you a sample of our stock sector members video. Of course, that is for level 2, 3, and 4 members. In this case, he's looking at country ETFs, and the sample is going to be analysis of Saudi Arabia. Pretty rare that we show something like that. I'm going to show you a short-term view in Bitcoin and Ethereum, and there's trouble ahead in the next couple of weeks where we believe the risk to the downside will pick up again. Then I'm going to show you our once-a-year amazing Give the Gift of askSlim special. Non-recurring memberships, huge discounts, and we send you back a gift, an Amazon gift card. So I'll show you some details on that just a little later. Give the gift to someone you know, or give the gift to yourself, or use it for an upgrade. And I'm going to bring you stock market analysis. We'll look at the short term of SPY and where this rally will stall and what will happen after that. I want you to go to the askSlim website, askSlim.com. Look around there. If you're new, get acquainted with us. Become a free member, and then you'll be getting some notifications from us, especially when this video is available. On YouTube, please do subscribe to the channel. Click the notification bell. And like this video, give it a thumbs up. And on Twitter, follow us at askSlim. For any questions you have about what you see in this show, about memberships or our style of analysis, education, please write to Matt at askSlim.com. This is a preview of stock sectors. This is a member video with analysis of country ETFs. Matt does a lot of alternating of the analysis. I'm sorry, RV does a lot of alternating of the analysis that we do on these Tuesday videos. And this one is just beautiful with a lot of these country ETFs. And we rarely show Saudi Arabia, so this is really interesting. And what's very interesting about it is that he shows negative analysis and how that's formed. And you're going to see how cycle analysis makes things very clear. Arvi, show them what I'm talking about.
This is the weekly cycle analysis for the iShares MSCI Saudi Arabia ETF, or the KSA. And first, I want to highlight this clear left shoulder head and right shoulder, head and shoulders formed. And we are now very close to this old low at 39.62 and getting late here on the weekly. So the highest odds are that rallies would fail quickly here in the KSA, and we look for a move down into this blue zone from 37.25 to around 34.75 or so. Levels on the upside are falling as we do make new lows, but they are coming in from around 41.94 to 43.55. So not a great picture here. Certainly favors a short side bias on the intermediate term, and overall lining up with what we are looking for in oil, which is lower into that January to February time period.
Just great work on that, Aubrey. Thanks. All right, this is the analysis on Bitcoin and Ethereum. I think you're going to find this very interesting, this short-term analysis. It shows big risk into December over these next couple of weeks. This Binance Recovery Fund that they put together of 1 to 2 billion, I think it's way too small. And I think it's important to ask the question, well, then who's going to rescue Binance as they take on all of these troubled assets? Big trouble may be coming. Take a look. This is the daily chart on Bitcoin. You can see with our cycle analysis, what we're going to key in on here are what we call the minor cycles. These are these small blue ones that you see right in here. And you can see that there is a good reflection of the energetic movement of each of those small cycles that you see on the bottom, as shown by these light blue dotted lines right in here. The darker ones are the more dominant cycle. And when they come down together is when you tend to get the biggest risk on the downside. I just want to focus in right now on where we are in Bitcoin for this shorter time frame right in here, looking at just these next few weeks and out into December. I think what's key to look at here is this triangular shape. So what happens here is that the pressures from the more dominant cycles affect the pressure from the minor cycle. So here where you have a rising phase, you can see that it got up for a day but really couldn't move to the upside, hit some resistances up here, and then began to just move sideways. So that means that this upward pressure on this minor cycle is meeting a very strong downward pressure from this more dominant cycle that's coming down right in here. How do I know it's coming down? Because this low is way lower than where it began over here. That means that the greatest probability is that this will release to the downside in here as this corrective period then takes a hold. I want you to note in here this ETH, that's this green cycle right in here that's coming down at the same time, and that is suggestive of the fact that they will decline together, Ethereum and Bitcoin, which makes sense. Getting below this low, 4610, as you can see, we noted that as minor cycle low support, that breakdown would be negative below that level, and so would likely bring some very strong selling. It would probably get you down to this level here around 13.4, 13.5 in Bitcoin. There is risk down here all the way down to 12.4. And then there's a weekly on the more on the longer cycle on the weekly chart comes down to about 10,000. This is 11.2 right over here. So there is a lot of risk here in these next couple of weeks. The trough timing is between these two lines right over here, which means that we would expect the low to come right around the end of November out until the second week of December there. Then after that, there is another period where it could try to rebound, but then a lot of risk out over here into the late December, beginning of January period. So right now, as we focus in on these next couple of weeks, there is significant downside risk in here. Remember that this Binance rescue plan with $1 to $2 billion is really small relative to the nightmare that's going on in this whole industry. So this is really a reflection of what could be a breakdown coming again in these next couple of weeks. Let's just switch this over to Ethereum, ETH, and we will look here at this same, let's just get this proper /ETH. And we will see a similar thing going on here in Ethereum, and that would be where these next few weeks, let's just get a little closer look in here, is reflective of the potential breakdown and downside risk here. And what that looks like is that these downside targets right over here point to around 900. Now, I don't have this extended out like I have this in the Bitcoin market, but you get the idea. This same triangular shape right in here, and the attempted rally that failed. Now, what's important to note, and I'll go back to Bitcoin too, is that on the bottom here is our slim ribbon SPO. This is a momentum signal that says the downward pressure from this slim ribbon here, which is negatively configured, is likely to cause more downside movement. So right now we're getting this little rebound in here on this Binance news that you can see that Binance will be trying to rescue this industry, but overall the probabilities are high that this is going to break to the downside. If it doesn't, if it can hold in here in the rectangle, in the triangle, then it probably means a little rally out over here and then turning down into that December period that we talked about in Bitcoin. One more thing I want to show you in Bitcoin is this momentum conditions right in here that I think are so important, and that is the slim ribbon right in here, which shows you the negative configuration pointing downwards in here, and this same negative resumption signal that you see right over there, which says there is a strong likelihood that Bitcoin is going to be moving to the downside. So we talk about very significant risks to the downside here in this market. Stock market short-term view, but first, the return of Give the Gift of askSlim. Don't miss this great opportunity. Announcing the askSlim Holiday Special, Give the Gift of askSlim for 2022. This is an amazing offering. Special rates for 3-month memberships that are non-recurring, of course, because we're giving the gift. Give the gift to someone you know who loves trading. Give the gift to someone you know who loves technical analysis. Or give the gift to yourself. Great for first-time members. Use the special to try a higher level membership if you're already a member. And there's a bonus gift for you. We give you an Amazon gift card for making this great purchase. So much to show you in here. We're going to look at this level 2 special holiday offer, 35% off for 3 months. That's only $114.75, $38.25 a month versus $59 per month. Plus, we're going to send you back $20 gift card for Amazon. You can go to askSlim.com and I'm going to show you how you can learn more information. The next one is our level 3 special holiday offer. Special $35 off for 3 months. That's $232. That's $77.33 a month for this jam-packed gift that you can give. That's a regular $119 a month, so great savings. Plus, we're going to send you back a gift card for Amazon for $50. And our level 4 special is just as great, if not better. Level 4 special holiday offer. It includes our custom Thinkorswim charts and proprietary studies and indicators. So you have to have a Thinkorswim account to benefit from this. Special 35% discount is $303.75. That's only $101.25 per month versus $159 per month regular. Plus, we're going to send you back a $100 gift card for you. This absolutely is amazing offers that we're giving now. And of course, these are non-recurring. This askSlim Holiday Special, Give the Gift of askSlim for 22 with this bonus gift for you where we send you back these Amazon gift card. Special 3-month memberships, non-recurring. Give the gift to someone who you know loves trading or technical analysis. Give the gift to yourself. Great for first-time members. Or use this to try a higher level membership if you're a premium member for 3 months. Go to the top of the askSlim.com website and click that Learn More button, and it's laid out for you beautifully. You can see everything that's available in every one of these member levels. If you want more information, of course, you can write to Matt at askSlim.com. And he will be able to give you all the information that you need. I know you're absolutely going to love giving the gift of askSlim for 2022. Okay, this is the stock market short-term view. We're going to look at SPY daily cycle analysis. Remember, I'm showing you this now, but if you want to get our full analysis, now we're only going to look at a daily chart, you can get SPX, NDX, the Russell in our stock index report daily. So that's available for level 1s through level 4. So you'll be able to get every single day our analysis on these indexes, weekly and daily, and it's a great reflection of market conditions. Our proprietary indicators are in there. It's just an amazing report that Matt puts out every single day. So that's how you get the full analysis. Right now, I'm only going to show you the short-term analysis on SPY. This is the SPY chart, daily chart. And what this has is cycle analysis on it. And I always do this for those people that are new and not familiar with our style of analysis. We look at market energetics. Essentially, these arcs or cycle brackets, as they're called, are drawing tools. And what they show you is the energetic movement in the market. And you'll see where the bottom of each of these cycles come is where the low normally is in that area. So this vertical line shows you the exact spot for the low. Here was the low for that cycle. Here was the low for that cycle. Here was the low, which came right in between where our projection was right there. And now we're in the next rising phase. There's also a minor cycle in there that is 1/3 of these dominant cycles. And sometimes it's a half, sometimes it's a quarter, but in this case, very clearly 1/3 cycles are showing up in here. And we are in the first rising phase of this 1/3 cycle and the dominant cycle, which is a place where you get good upside movement, you can see. Now, it's important as we continue the teaching in here is that you understand there's some proprietary indicators in here and cycle analysis and support resistance levels. This was a left-hand translation. In other words, this rally ended on the left side of this cycle. And then when it declined, after it broke underneath this level right over here, it said the decline would likely come to the end of the cycle period, which is exactly what happened. Then there was an engulfing pattern right there, which brought the bottom of that cycle, and that was a good message. Notice how this island made the top here, the abandoned baby made the top here, and then this engulfing pattern made the bottom right over there. It's important also to note that these translations give you important messages. This positive translation, we call that a right-hand translation, is when the peak of the cycle was made way on the right side. Just absolutely exquisite. The low made right in the middle as where we expected, and then the market moving up again. The slim ribbon right over here turned positive right up over here, and then stayed positive through this little dip right there and has given you indications that the energies were still strong on the upside. That is what made this right-hand translation. The slim ribbon PO on the bottom right over here, which is our momentum indicator from the slim ribbon and gives you resumption signals, gave you a resumption signal right here that it was likely to continue up. Notice the port right in the middle of the slim ribbon on the 13 EMA. You can get the slim ribbon for free to put on TOS, Thinkorswim, if you would like, or you'll see it on our static charts also for other membership levels. So where are we right now? We are in this area right over here. We're rising. We expected that. We thought that this low would come based on the weekly chart, the intermediate bottom, and called for a rebound through this period of late October all the way through potentially into January, way out over here. This decline, this peak in December is very important. There is a VIX low expected right over here, and that means that in the next couple of weeks, we expect the VIX to bottom and then to be moving up. That would give you the stock market peak. The question is, will it peak here at that resistance at about 406? That's the intermediate 50% that comes off of the weekly chart. Here's your major 50% that comes off of the weekly and monthly chart, and your intermediate 61.8. So this resistance level over here, which I consider to be very heavy, is 414 to 419 on the SPY. The question is, will this green track be what takes it up over there and you get up to that level, or will this level up over here right around 406 or somewhere in there be where this resistance comes in and it stops the the rally. That's actually what we think will happen, is that sometime here in December, specifically around this period where the VIX makes its low, will be where this peaks and then the market moves down. The lower track and this period over here of decline where this energies will be moving down in both the dominant and minor cycle can give you a pretty good decline. I want you to note these yellow ovals in here where they show you where the highest periods of risk are in these cycles, where you get the minor and dominant cycles coming down to their troughs. You can see this was a positive one right over here. It didn't give much ground. Strong decline, and another positive one. When you get the positive one, it tells you there's a lot of upward energy. So we'll see if that upward energy is the same in here. But then when you get into this period here, you're going to get into that period of risk, and we'll see what type of decline we get. If we get up here into this upper resistance, we're probably not going to take out this low at 390.14. If we stall right in over here, there's a good probability we'll take it out at 390.14. If this market stalls earlier and then breaks 390.14 on the SPY, it will be a very negative signal that we see in here. So that's an important level, 390.14, and these levels up over here, 414 to 419, extremely important on the upside. If we are in a bear market, as I expect, these levels will likely not, will prove to be very tough resistance on the upside. Let's just look now at what I have labeled in here about the market conditions for the stock market right now, which I think are important for 1125. The cycle configuration, in other words, this configuration is positive. The cycle translation that shows you this peak well above this peak is very positive. The cycle phase is rising and early, as we are right here in this rising and early phases. The slim ribbon is positive, and when it's positive on the thinkorswim platform, this is our level 4 charts, then it turns this green, and it turns the volume green to give you that idea. The slim ribbon PO is positive. It's green with a positive resumption. Our option bias indicator is very positive at +3. Our market condition indicator is 40 and rising. That is slightly positive. That takes into consideration the longer term conditions in the market, which were quite negative, of course. So it's turned slightly positive right now at 40. You can get all of this information, of course, on all of the indexes. If you are a level 4 member, you will get all of our proprietary information, and you'll get our market monitor, which has that all laid out for you very nicely. So again, what we're looking for is a continued rally in here out into sometime around maybe December 9th, 10th, 11th, somewhere right in there, and then turning down. Depending on how high it gets and how weak it is in here, we're going to learn a lot about the conditions of the market going forward. Right now, in that rising phase and still positive and following overall our patterns just brilliantly as the stock market has moved up in what we have considered a bear market rally. Very few analysts out there were able to call the decline as we did using this style of analysis, or the rebound as we expected to happen, because we bring together the sum of the evidence of all of this information. Of course, you can do that also by becoming an askSlim member and getting this analysis and learning how to use this analysis. That's our look at the short term, and you can get that by essentially giving the gift of askSlim to yourself. This is our special bonus right now that we're offering, that we give an Amazon gift card to you after you subscribe to us. Earlier in the askSlim Market Week show, I showed you the details on this, so I encourage you to go to the top of the askSlim front page, askSlim.com, and click that Learn More button. Everything is laid out for you there, and you'll be able to see what is included in that. The special holidays give the gift of askSlim, just an amazing way to get 3 months non-recurring, so you don't have to worry about this recurring, and learn the tremendous amount of information information that we share can be very valuable to you. I want you to go to askSlim and check that out. You can get acquainted by becoming a free member. Subscribe to this channel, click that notification bell, and like the video. Give it a thumbs up. Watch the member videos on their playlists and past shows. On Twitter, follow us at askSlim. And for any questions, write to Matt at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit and I'm